Hey guys, it's Pete. How you doing? So a number of you who follow me on Instagram have asked me to do a video where I talk specifically about the coronavirus and what's going on at the moment with the markets. And the question has been, does this present an opportunity for you to start investing in the market and take advantage of the price corrections that we've seen recently? Now, that is a pretty loaded question, and it's not a simple yes or no. So if you follow me, you know that I like to give context with my answers. So what I aim to do in this video is to give you as much context as possible so that you can go away, do some further research, and at least make an informed decision of your own. I have to stress, this is for educational purposes only. This is not financial advice. Now, before we proceed, if you are watching this on YouTube, I need you to smash the like button, subscribe, and hit the notification bell so that you know when these kind of videos are uploaded. There will be plenty more of these as we go through the year. And if you're listening to this on the podcast, thank you for tuning in. I need you to follow so you don't miss out on any future episodes with content just like this. So without any further delay, let's talk about the coronavirus. So I think it's safe to say that everybody is aware of what's going on with the coronavirus right now. I mean, this is something that started out in China and it's now a global pandemic. And whilst the risk level is still relatively low, as of today, 3rd of March, confirmed cases in the UK sits at 39. And I think in America, it's something like 200. Now, this isn't the first time that we've seen this kind of global pandemic. Back in 2002, 2003, we had the SARS virus, but the SARS virus didn't impact markets in the same way that the coronavirus is right now. And there's one main good reason for that. If you go back to 2002 and 2003, back then, the Chinese economy was only the 6th largest in the world. They accounted for about 8.3% or 8.7% of global GDP. If you fast forward to today, the Chinese economy is the 2nd largest in the world and they account for 19.3% of global GDP. That basically means that the Chinese economy has grown significantly and is big, it is large. The best way that I describe this is to think of the products that we know and love, and the Apple iPhone is a prime example. Now, if you think about Apple and where they produce, where they manufacture their products, they manufacture those things out in China. Now, when the coronavirus was first discovered, I think within the first 4 to 6 weeks, McDonald's, Starbucks, and Apple actually shut down their workshops completely in the bid to try and contain the spread of the virus. We even had airlines completely stop flights, no traffic in, no traffic out, again, in a bid to contain the spread of the virus. Now, what's important to note within that is that think of it from Apple's point of view. How much money do they make from the Apple iPhone? How many do they sell on a consistent basis? If China is their main hub of production and they shut down production in China, then clearly there is an impact on sales, there is an impact on profits, and therefore an impact on the share price. And that just looks at one company specifically. When you look at China, they are a global player in many sectors. So tech is one example. And with motoring, a clear or simple example that I can think of is Tesla. Now, many of you who follow me on Instagram, you know that I own a Tesla Model S. I also own Tesla stock. Tesla have recently opened a plant in China for Model 3 and Model Y production. Now, if they have to shut down production in China, that means that they cannot fulfill Model 3 orders. They can't start to produce the Model Y. And that therefore has a knock-on effect to profitability and therefore the share price. Now, I've just given you 2 examples across 2 sectors. All you need to do to understand the scale of this is to extrapolate this into other sectors that this might impact. For example, energy. We've already seen share prices in places like Chevron take a really, really hard dive as a result of the fact that China is one of the biggest importers of oil in the world, and demand has dropped by 20% since the discovery of the coronavirus, and therefore that impacts the share price of people like Chevron and ExxonMobil. You also need to think about the impact that it will have on banking, for example. And it's for all of these reasons that we've seen the markets fall by 12 or 13%. Now, does that mean you have a buy-in opportunity? The answer to that is yes and no. The problem that you have with this is oftentimes people want to time the market. They want to get in at the lowest point possible because it makes sense, right? It's simple economics, it's simple business principles. You buy low, you sell high. So it makes sense to want to get involved while the market price is so low because you have more of a chance of selling something at a greater value. However, it is almost impossible to time the markets. So the markets as of today, could we say that the markets will go down another 10% or 20% as a result of this? Nobody knows. They might do, they might not. And the key here is if you wait for the market to fall and the markets go up, well, you never got involved in the first place. And the gain that you could have got, had you got in, you didn't get. And the flip side is also true, that if you did buy, whilst the numbers are low right now and the market falls even further, then you potentially lose money because you have done so. And this really comes back to a lot of the stuff that I talk about whenever you hear me talk about investments and investing. What you need to ask yourself is, what is the reason for you investing? Are you looking to invest in direct stock, i.e. you put all of your money into one stock like Amazon or Tesla, for example? Or are you looking to be a bit more responsible in how you approach your diversification, i.e. in opposed to buying one stock where you have all of your money in Amazon and you've got one egg in one basket, do you want to have 15 eggs in that one basket where you have your money spread across and you're diversifying your risk? This is all about risk management and understanding why you want to invest in the first place. It is almost virtually impossible for you to time the market. So in answer to the question, is there an opportunity? Yes, there's an opportunity, but there could also be a no, there is no opportunity for you to invest right now. It really depends on what you're investing for. You've got to remember, when you invest in the markets, it is a long-term game. It's not a short-term game. Yes, if you're looking to get in now because the prices are low, you've got to feel comfortable in the fact that if you buy in today, tomorrow the prices might fall even further. And if they do, you've got to ask yourself, are you comfortable with that? Are you comfortable with losing potentially the money that you invest in the first place? On the flip side, you could buy today and the market could rally and you see that you're riding an up curve to great returns. Both outcomes are possible. And as an investor, it's really important to understand that risk and to come to terms with the fact that the investment will go up and it will go down. And to a certain extent, you have to be comfortable with the fact that if you do invest, you have to be prepared to not receive your money back, especially if you are investing in direct stocks. If you're investing in things like portfolios, you can manage your risk and you can tailor the portfolio to match your risk appetite. But that's another subject for another time. So is there an opportunity? Yes, there could be. If you're willing to take the risk, if you're willing to acknowledge that your investment will go up and go down, and you could get in with the timing being wrong and immediately see your investment fall. I bought Tesla stock and I've seen the Tesla stock fall in price quite a bit, but I bought the Tesla stock because I believe in the company. I own the car. I believe in what Elon is doing. And therefore I plan to hold that stock for the long term. And for me, it doesn't matter if the price goes down right now. I bought the stock because I want to hold on to it for the next 5 to 10 years. If that is you and your mentality, then absolutely, this could be an opportunity for you to get invested in the markets. If you're not like that and you're thinking, well, actually, I've got £2,000, I can't really afford to lose that money, then absolutely not. You should not be thinking about investing. I hope that makes sense, and I hope that provides a little bit of context. Again, this is for educational purposes. I could go on and on and on and speak about so many other areas and considerations that you need to kind of think about when you talk about investing specifically, but this video would be way too long. I think as a nutshell, I think the basics are very important for you to understand. And again, if you are following me on Instagram, then feel free to drop me a DM and we can have a conversation, exchange some voice notes on there. But again, please use this as a basis to do your own research. If you have watched this video and you've enjoyed this, don't forget to smash the like button, subscribe, and hit that notification bell. And if you're listening on the podcast, please don't forget to follow and give us a good rating. Again, guys, thank you for your attention. I will catch you soon. Bye.